The passion, not just almost all Nigerians. I haven't spoken to anyone who is all right with that cybersecurity levy, and I know that, well, more perspectives will be shared, and you guess they are threatening courts if the government doesn't listen. But a lot of people have said that President Bola Tinubu's administration is a listening one, so we would be waiting for the response. So far, we even have a bit of response, not directly to that, from the Fiscal Policy Reforms Committee. We'll talk about that later. You're welcome. Good morning. Welcome to Business Morning on Sunrise Daily. It's about 30 minutes of business that we do before we head back to the Sunrise Daily studio. We start from the global space, where oil prices this morning rose as a shrinking U.S. crude inventories signal tighter supply amid rising hopes that the Federal Reserve would cut interest rates by the end of the year. And so we put our eyes on the numbers and see about 23 cents. That's equal to 0.31% in the green for Brent, gained up from $82 that we had yesterday, $83.81. WTI, $79.28, 0.43% in the green right there. Looking at what's driving the numbers this morning, crude inventories dropped by 1.4 million barrels to 459.5 million barrels. That's according to the Energy Information Administration, and it's more than what analysts expected. Rising gasoline stocks swell unexpectedly by more than 900,000 barrels in the week to 228 million barrels, has kept prices moving higher. Hopes for a ceasefire is also there in the Middle East. However, the U.S. says that earlier in the week that negotiations on a Gaza ceasefire should be able to close the gaps between Israel and Hamas. And we know that the last that was discussed of this is that Israel was the one that said they were not satisfied with the conditions laid. And then one of the issues that's very top on our list is the Naira. We only had one breathing space this week. It's Thursday, so perhaps we will hope for more. But once again, we saw that the Naira weakened on NAFEM. It dropped to 1,421 Naira 6 kobo, open at 1,416 Naira 57 kobo. That's a drop of 0.32%. For NAFEX, it was the same thing, same sentiment. 1,419 Naira 40 kobo. From 1,000. That's a huge one right there. Seems there were more demands in NAFEX yesterday than NAFEM. So we see that it opened at 1,403 Naira 7 kobo and closed at 1,419 Naira 40 kobo, a drop of more than 1% in one trading session. And the expectation, unfortunately, is that this trend will continue for most of this week. You know, I think the CBN might have to look the way of the forex market again and see if we can have a bit of rebound. Talking about taxes, the Presidential Committee on Fiscal Policy and Tax Reforms has proposed sweeping reforms to Nigeria's value-added tax system to aid the removal of multiple consumption taxes currently imposed by various states. According to the committee, the proposal includes removing several smaller consumption taxes that states levy independently, which often overlap with federal government VAT and creates a redundant financial burden on businesses and consumers. Well, I just paused to tell you that at this point in the country, businesses are paying about 40% of their profits as tax generally. So you just imagine what that means to entrepreneurs, especially small businesses, and that's why people try to escape taxes in the first place. Well, at the same time, the committee will be proposing the removal of VAT on some basic food, educational, and healthcare items. Mr. Oyedele, who's heading that committee, explained that the changes are aimed at simplifying the country's complex tax framework, enhancing business competitiveness, and promoting economic fairness. Meanwhile, Mr. Oyedele has denied claims that his committee is proposing a rate hike, but rather propose full input VAT credit for businesses to reduce their cost of doing business and minimize the strain on their cash flows. We'll be discussing commodities, and let's see if the let's see if the new cybersecurity levy would have a hit on it. But let's take a short time out, and then we'll be back with Dumebi Oluwole. It's commodities time now. We have Dumebi Oluwole joining us. Hi, Dumebi. Dumebi is a senior analyst of financial derivatives. Dumebi, so on Tuesday we talked about the Naira, and you did say we shouldn't expect. We had a rebound. I think we had a rebound the day before on Monday.
Yes.
So I think I was getting ahead of myself. But reality has since set in, because since then we haven't seen any appreciation. It's been dropping. I mean, on NAFEX it was more than 1% down at the close of trade yesterday, and doesn't look like perhaps maybe the CBN will intervene one of these days. There you have it, NAFEX. Maybe we'll have a CBN intervention, which is not what we should be looking forward to, but maybe to give us a little bit of good news in the very short term.
I mean, I think it's somewhat always, I think economists oftentimes don't like to jump the gun. So even when we see some of these things happen, except if it has become a consistent trend, that we can say, okay, yes, you're likely to expect the trend. So well, that was more of like a blip. And that's why I tried to help you, to help you on Tuesday to just anchor your expectations. Because again, but one thing I think is worth mentioning is that during, economic situations like this, these are the kinds of things that you would experience until the market eventually corrects itself, and we're seeing the country on a steady path of economic stabilization. So it's more of like a bumpy road whenever reforms take place, and chances that are that the Naira would, the currency in itself, for any country that undertakes any reforms, would see, hits left and right until there's a steady inflow of FX demand. And a very good case in point for Nigeria at this time is Egypt. So from the beginning of the month, or I think from the end of April up until now, we've seen the Egyptian currency actually gain to some extent, and this is after steady depreciations, even in April, just like the Naira as well. But there has been a huge influx.
Had this very interesting
Yes, that's where
deal.
I was going to, exactly. So that huge influx of, foreign exchange, and the Egyptian, the Central Bank of Egypt increasing its gold reserves has been able to help, first of all, boost FX supply liquidity and reduce the effect of money supply on inflation. So, for instance, Egypt's month-on-month inflation as of March significantly declined, from positive, significantly declined. So we're seeing some level of correction, or some level of steady path towards stabilization. And the outlook for Egypt right now is quite positive. So basically what I'm saying is, as long as we continue to, enact policies, and the market sentiments towards Nigeria's FX market is positive, and we're seeing, an increase in this inflow, so meaning that market sentiments are backed by an increase in investment, we will see that support the currency. So again, it's just a bumpy road till we eventually get there, and this is a symptom of reforms.
It would remain a bumpy road until they are intentional, because even the Egypt we're talking about, they were very intentional, about their approach. They didn't just get the inflow, they did connect it to, I think, infrastructural projects and all of that. So ensure that those projects will give investors the confidence that, you're backed and there's going to be an inflow. So in our own case, I mean, we can't just say, oh, yes, we have reforms. I know the guest on Sunrise Daily was talking about the monetary and the fiscal. It's not a new conversation and all of that. And also the fact that inflation in Nigeria is actually supply push. So, I mean, even when you have all of the beautiful reforms, we're still going to look at the supply. We're talking of commodities, for instance. We're talking of food inflation that is over 40% now. Do we see intentional steps to, say, okay, yes, let's suffer it for 6 months because it takes 6 months for cassava to get off and be harvested. Do you understand, for instance, there's a plan. By the end of 6 months, this is going to be over, or at least it will start getting to the end. I mean, for me, that's the worry.
And you're very right. I really think you should start being an economist at this point. But on a more, I would say, economic note now, and you're very right, you're very spot on with everything that you've said. And that's where you see a lot of economists coming out to say we do need a bit more harmony between fiscal policy moves and monetary policy moves. The CBN is doing what it needs to do, to be very fair. unfair. We've seen an increase in the monetary policy rate by 600 basis points. That's a lot of strain on businesses, although it is still the trade-off that we have to make, where we're saying we want to stifle, we want to curb inflationary pressures, but at the expense of increasing the borrowing costs for businesses. So while that trade-off is happening, there should be supporting, fiscal policy measures. And unfortunately, we haven't really seen that happen on the fiscal side of things. Insecurity is still a problem. Oil production is still being pervaded by theft and vandalism. And we're seeing that reflect in the numbers. Natural gas production, we're still hearing a lot of things about gas flaring. Production is also not ramping up, even though there are a lot of
minerals.
Exactly, mineral resources. And even though we're seeing a lot of positive, attention towards, for instance, our lithium sector, our copper sector, we're also seeing that even towards natural gas. But unfortunately, we haven't still done the good and dirty job at the same time to make sure these investment opportunities are long-lasting. And to some extent, this, when you look at Nigeria's confederation, you do realize that some work, or a lot of the work, rests within the states. So there was a time I did some analysis and I realized that a lot of states in Nigeria are still heavily dependent on fact disbursements from the federal government. And until states do realize that they can actually build some level of comparative advantage with resources that they have absolute advantage in, we will still keep having these conversations, simply because the job of boosting, of catalyzing growth by creating an enabling environment for businesses to thrive does not only rest on the federal government. State governments also have the resources, and if they do what is necessary, and a very good template for this is the United States. You see states like Texas, California, everybody, New York, trying to ramp up investments in their states, attracting labor, attracting investments, attracting businesses by doing the job.
I know states will tell you there's that list. What's the list that, the federal government is controlling some of the resources, in the states. So that hampers, their movements and all of that. Perhaps there'll also be a need for the lawmakers to look at
maybe some revision might be worth it. But again, it just tells you how much of resources are just, lying there, and we're not tapping into those resources. And there is that need for us to do that, especially when we reopen or we deepen the conversation about economic diversification, and we look at it from, bottom up. Right? Even though there are a lot of issues happening at the top, for instance, and I keep saying this, especially with
you have the VAT reform.
Exactly, is happening. Then you also consider the landmark demolition that also happened, and you look at how disincentivizing that would be for new entrant investors and existing investors, simply because of how it happened. Right? So it's a huge blow to the fact that we are trying to attract investments into the country now, and then we're going ahead to do that. So there are a lot of counterproductive and counterintuitive policy signals that are coming out of the country, and that is making investors very cautious and jittery. And I will keep saying this, the money that Nigeria needs to resuscitate itself, it's outside our borders. We're not producing enough, we're not yet self-sufficient, and until we're able to confidently attract investments, we'll keep having the same story.
All right, Dumebi, well, Nigeria is our country. We have to be passionate about it.
Exactly.
Thank you so much for your time this morning.
Thank you for having me.
All right, let's take a break again. When we come back, another issue that concerns your money. Yes, so stay with us. You're welcome back. Well, let's talk about your money now. The Nigeria Deposit Insurance Corporation has announced a revision of the maximum deposit insurance coverage for banks operating within the country. And banks hold your money. So let's find out how this concerns you. Let's look at the numbers. Or before I look at the numbers, let's introduce our guests that is going to discuss this. Professor Segun Ajibola, former president and chairman of CANSO, Chartered Institute of Bankers of Nigeria. So Professor Ajibola would join us now to tell us how this is going to affect our monies and what this is trying to achieve. Good morning, Prof.
Good morning.
All right, so we see that there's been a revision by the NDIC, and deposit money banks now have to do, they used to do 500 million to now 5 million. microfinance banks, 200 million, and then primary mortgage from 500 to 2 million, mobile money operators, 500 million, 500,000 used to be to now 5 million per subscriber. So tell us the implication of this first. Is this because of the recapitalization coming up in the banking sector?
If we dimension what NDIC, Nigeria Deposit Insurance Corporation, stands for, we can summarize this in just 3 specific areas. One is the insurance coverage, which is this. The second is to help to stabilize the banking system. They do that through periodic examination, periodic visit, and some remedial actions, which at times may even involve some elements of a distress resolution. Then the third leg is what we refer to as the undertaker role of NDIC. That is when a financial institution, the situation has gone beyond redemption. Then there is liquidation, there is realization of assets, there is distribution of the proceeds to all stakeholders in the order in which the law permits them. Now, when we look at this role, which is that of insurance cover, as we know, to have an insurance cover gives you some confidence. To have an insurance cover means if anything happens due to no fault of yours, then you still have some things that will come to you in terms of what you have invested in the system. So for NDIC, the role now is to say, let's look at what goes immediately to our depositors in case a bank is liquidated. Some of us that are risk management professionals will be wondering for long. Somebody has his money, whatever amount, in a bank. The bank is liquidated. Then you are talking about 500,000 from used to be 200,000. It's like nothing to maybe an investor that has stake maybe his life savings in millions to a bank. Now with the revision to 5 million, 2 million, 5 million, it gives some confidence to depositors. And the depositors can now say, because there is a maxim in investment, you first of all look at where you can protect your principal, not the interest. So here now, it's not just the principal that is being protected, even principal plus accumulated interest. Because in case of liquidation, what matters to NDIC is the balance on your account, your deposit account, as at the date of liquidation. Okay, so they are saying they can cover up to 5 million of that. Okay. So it gives confidence to depositors.
Okay, Prof, let's relate this to the recapitalization. I think it's kind of obvious. I mean, some analysts have said we have about 25 banks now, I believe. And depositors have said it might end up to about 11. We know what happened the last time there was recapitalization. So, and a lot of people who are watching this program, they have their money in different banks, banks that are on different tiers. What happens with the NDIC now, talking about insurance and all of that? And I know they did make some changes to the percentage of coverage of people's money. Sure. So if you help us enlighten that. And then what happens, perhaps a bank is merging, cannot make it during the recapitalization. Help us to paint the picture. I have, for instance, 5 million Naira in a bank that didn't make through. Then what happens to me?
Yeah, if we look at what has been happening, if we did 2005 recapitalization exercise, only very few banks out of the 89 banks in Nigeria then had that problem of not being able to migrate to the new recapitalized banks. And as at that point, the interest of depositors was fully covered. No depositors were allowed to lose their deposits. So we've done fairly well the regulatory authorities have done fairly well in protecting the interest of the depositors. Now, when it comes to the coming recapitalization, we still hope that there will be no bank that will find itself in a liquidation scenario where NDIC has to come to now apply these new rates. But generally, with this policy, about 98% of all bank depositors in Nigeria will be covered in case anything happens. So that critical mass of the people or bank customers, they are now being protected, which means you have nothing to fear in case a bank goes into liquidation. You will get whatever is the balance in your deposit account fully. That is the 98%. But the critical mass of about 2%, because it's 80-20 rule, the 20% of bank depositors having the 80% of the balances in the depositors' account. So that is, in terms of number, in terms of value, that 20%, which is now the 22% of all depositors, own so much in bank deposits. So they will help, because banks need that deposit from that 2% to continue business. They will help to promote and insist on good corporate governance in these banks. They will strengthen competition in the system. They will ensure good practices. So there is need for that 2% in terms of value. But the critical mass of the people as bank customers, 98% of them will be covered in case anything goes wrong from this new dimension of 500,000 to 5 million, 200,000 to 2 million. Now, when we talk about the coming recapitalization exercise, well, what the recapitalization is expected to achieve is to even strengthen the banking system, ensure that the banks become stronger, more capable, raise their capacity, so we don't even have any reason to fear the likelihood of a liquidation scenario under the new recapitalization exercise. But I believe that this step is being taken, and rightly too, by NDIC to help stabilize the system, to give confidence to bank customers, that especially depositors that are maybe becoming agitated given the state of the economy. So recapitalization or no recapitalization, this exercise has been long overdue.
Okay,
Because
but
we look at the figures.
Prof, you know now the fintechs are becoming popular, the mobile banks, you know, the one you just use on your phone, you get on. And I've seen some of them, they tell you they are covered by the NDIC. So they are captured in this because whenever there's any news, like now the CBN is warning them, or you can't do crypto transaction, which it's a directive that has been given to the deposit banks a while ago, even before now. But Nigerians are yet to build that full confidence in the fintechs. Tell us the position of fintechs and the NDIC.
Well, you can see that mobile money operators, they are covered here. You see, in financial management and in financial regulation, what is important, number one, is the institution a purveyor of credit? In other words, they can take money, they can lend money. That's number one. Number two, is there a license for such an institution to operate in an environment like Nigeria? If so, if you leave them unregulated, you will be doing that at the expense of innocent Nigerians that embrace this kind of services. That is why they are now being covered. But Nigerians too should be wary of going after unlicensed financial institutions. We've had the story of MMM, we have the story of all this. Banks are managers of liabilities because about 87.5% of the monies available to them to do business, they belong to the depositors. So that is why regulators should always protect the interest of the helpless depositors who innocently walk into these financial institutions to transfer business. So that is what is coming out as something so encouraging about this new policy, new regulation about deposit corporate coming from NDIC.
All right, Prof. we're almost, in fact, we're out of time. But what is the process of getting refunded as a customer if you feel, for instance, you are using one of the, let's say, the fintechs, for instance, and suddenly they go off, you can't access them, you have some money there, and they're covered by NDIC. How do you start as a consumer?
No, immediately it happens. NDIC will call on all depositors to come forward. Proof that you brought money to this institution. The moment that proof is confirmed by officials of NDIC, it is what is payable to you immediately. The 5 million, the 2 million we are talking about is payable immediately. If NDIC is now unable to cover the total that is outstanding, when they start realizing the assets of such an institution, they start paying you instrumentally. But the figures we are talking about here, they are payable immediately in case of a liquidation scenario.
All right.
So that is why the interests of depositors are now covered. 98% in terms of a number of customers, and about 25% in terms of value of deposits in Nigerian banks.
All right, Prof, thank you so much for that clarification. I know a lot of Nigerians who heave a sigh of relief when they think their money at least is covered. Thank you for your time. Professor Segun Ajibola is the former chairman of CIBM. Thank you.
Thank you very much.
All right, now it's almost time to head back to Sunrise Daily Studios. We'll just tell you some market numbers as it closed yesterday. The market was kind of undecided, a lot of struggle between the bear and the bull, and closed unchanged. 98,223.97, and the equities gap opened with 55.55. I think I said that like yesterday, and closed at 55.55. Interesting number right there for the equities cap. Activity was mostly red. We see the volume was in red. The value was green. And then deals were also in red. In fact, more than 15% down at the close of trade. Top trades, almost like what we had the day before. UBA, Accessco, and then Transcore, they led the markets yesterday. So that's the much we can take on the market. We always have a better market conversation in the afternoon at 1 p.m. So you want to join Business Incorporated. Will is back in the studio. I'm sure she has a lot cooking. She's cooking as we speak right now for you. Join us, Business Incorporated. We'll give you more, or a more robust conversation from the business world. I'm John Mekwa. Let's head back to the Sunrise Daily Studios.